Well, welcome to the Two Tokens podcast. Here we are in, blimey, October already. Time's flashing by. Delighted today to be joined by Coen from AFME, nearly got that wrong, and Meindert from Catena. We're here because we've been invited by the Dutch National Bank here in Holland because they're very interested in tokenization, kind of why bother, why is it relevant? Interesting, and we'll go into this a bit later on today, but the Dutch have a consistent leading trend, and I'm going now back over hundreds of years in all sorts of different ways, but particularly in the financial service sector. And today, the Dutch National Bank have invited a round table. We've got about 30 or 40 people, I think, attending. But I just wanted to go back in time, first of all, and look at, why Holland? Why are we here? I know, Coen, you're a Dutchman, but you're in London, a bit like myself. Whereas Meindert, you're born and bred here, I understand. But the Dutch gave us the first joint stock company, limited companies we know them today. That came from here, East India Company. They gave us the first stock exchange. What a lot of people don't remember is back in 1784, they gave us the first mutual funds. And mutual funds themselves haven't really changed very much at all. We saw ETFs come out, but now we're seeing this thing called tokenized funds. And Coen, I'd love to come back in a second to get about that. But that's why we're here today. The Dutch government, the Dutch regulators are taking a more and more keen interest in this topic, as indeed other jurisdictions, because I think people are beginning to realise the transformational impact. And I don't want to make it a podcast about AI, but I think AI is going to, it's like pouring fuel on the fire. It's going to turbocharge the adoption as an alternative. And we're not talking about it's got to be all or nothing, but I think giving people a choice accordingly. So just finalising on Two Tokens, basically they've been around for 4 or 5 years, part EU funded. They've been involved in tokenization projects with the Port of Rotterdam, bills of lading, with gold, digitising share issuance, doing a lot of work in the energy sector. I know with yourselves, and they've got a cohort of about 20 or 30 companies.
Yeah, probably.
Yeah, and they have been invited back for the third time by the EU to around the topic of digital money and payments, which we'll come to. But Coen, first of all, can I ask you to give a quick intro to who you are, where you come from, and what does your organisation do in this space in particular?
Yeah, so my name is Coen. I head up the technology and operations team at AFME, the Association for Financial Markets in Europe, which is essentially an association, a consortium, if you will, of the largest investment banks, the global investment banks, so US-based, UK-based, EU, and also Asian-based. Myself, my own personal background, I'm an economist by training, started my career in consultancy in the US, then in financial services in the Netherlands, then moved to the public sector and ended up at the Dutch Central Bank for about 6 years.
So it's like going home today then?
It is like a bit like going home, and I haven't seen the refurbished building, so I'm quite curious to see what it looks like now. I remember the old building, and that was quite old. So apparently it's looking very nice now. So I'm curious to see that. But in the Dutch Central Bank, I worked on fintech policy. So actually the first discussions, not in the industry, but definitely I think in the regulatory space around DLT, tokenization, obviously CBDC and all of those things were topics that I was involved in. And then after a short stint in tech consultancy, I moved to AFME about 2 years ago, and to head up the technology and operations team, which is the team within AFME that focuses on all things tech. So AI is obviously very, very major at the moment, but also cyber, operational resilience, data, as well as DLT. And I remember, coming into AFME and talking to all the heads of the digital assets teams at the banks, and I said, okay, what's going on, and what do you want us to do? And they all said, look, we've all done our POCs, we've all done our stuff, we know this is interesting, but it's not scaling at the moment, and we're not making money essentially. So so talking through the issues, it was clear that this was a clear collective action problem, right? Where there's so many different puzzle pieces that need to fall into place in order for it to really work. And so that's sort of been our mission in terms of DLT at AFME, is to see if we can help push that along. So we're doing a lot of work on the policy side in Europe and in the UK, both with policymakers and in the Euro system, for instance, when it comes to wholesale CBDC and all of those the cash lag in wholesale markets. We're also doing quite a lot in terms of trying to build the ecosystem. So we've done a lot of outreach to sovereign issuers, debt management offices, to sort of educate them and give them a strategy on how they can come into the market, do a sovereign bond issuance, and sort of really kickstart the ecosystems in their country.
And are you seeing any particular jurisdictions if you like, at the sovereign level? Are certain countries more open-minded or accommodative of this sort of thing?
I mean, obviously we've seen a number of issuances in Hong Kong. We've seen obviously Slovenia come in and do the first sovereign issuance in Europe last year with the ECB trials, and now obviously more recently Luxembourg also did one. So there's definitely momentum. Obviously in the UK there have been announcements and there's a process in place to move towards a digital guild issuance or a series of digital guild issuances. So I think that's very, very positive. More can be done. I must say, when speaking to the DMOs and also to the governments, the finance ministries, you do get a sense that a number of them are very well informed and are looking at this. I think central bank money will be a key component, but also buy-side interest, investor interest, and all of that is growing and is moving into place. So I would certainly expect to see more momentum on the sovereign side. We ourselves have now, I wouldn't say shifted, because we're still doing a lot of engagement with sovereigns and governments, but we've expanded, if you will, our attention a little bit to the corporate sector, and expecting to do a lot more education with corporates in terms of the possibilities of financial DLT use cases. And how that could benefit both mid-corps with respect to maybe debt issuance, SMEs with respect to things like tokenized invoicing. So basically, and obviously payments now with stablecoins becoming a really feasible and interesting option for a lot of corporates as well in terms of treasury and all that. So I think that's going to be our focus as well for the next couple of months.
Brilliant. Okay. Well, thanks. Sounds like you've got a lot on your plate and a lot of plates you're juggling. Yeah. Okay, Meindert, we've met many times, but perhaps you could just give the viewers just an overview of your background, and in particular, you're doing some interesting things. You have been for a while, not just in energy, but in the renewable energy sector.
That's true. My background, Meindert Jansberg. I have a background in treasury and risk, and like 10 years ago, we have set up a small investment firm in the renewable energy sector. And we met two tokens a few years ago, really believed in tokenization, and we said, practice what you preach. So we set up energy blocks as a part of our group. And within energy blocks, we have a strong focus in implementing DLT, DeFi strategies in funding our energy portfolio. My background is in economics.
Oh no, we've got two economists.
Yeah,
two economists. So we've probably got three views then.
Yeah, so it will be probably a very boring discussion.
No, not at all.
But our focus is in implementing DLT in the funding strategies that we have, and especially in reducing cost. We have done some multiple tests in the market in offerings of private placements, which are registered on DLT. And one of the novelties that we have introduced since the 1st of October, that you are able to invest with a stablecoin, in this case USDC, in one of our private placements. So it's one of the first times we think this is possible in a private placement. It's still in the testing phase. It's open from the 1st of October. So it's for us testing and seeing what can happen. And from that point, we will also start looking into the adoption of more the traditional financial instruments on chain in a Web3 environment.
Okay.
So we're really testing.
But what does tokenization? Why bother? Why do we need to do tokenization?
Yeah, that's really good question. It's for us, it's relatively efficient and also a cost efficient and cheap way to get a broader funding base. So it's actually about opening up markets.
So new potential investors? New
potential investors, and working on an open ecosystem, and actually more or less democratizing investment opportunities for a broader audience. Of course, a lot of issues with regulatory items. But it's really challenging and interesting to do. So this decentralization movement and being able to invest anywhere and access anywhere, is really interesting. So that is actually curiosity that drives us to see where we can get and what it will bring. First focus here is cost efficiency. That's how it started. because you can cut out a lot of middlemen by implementing a DLT strategy. Of course, it's an investment upfront. But that was the first focus. But if you really dive into this, you can see the potential of tokenization in the financial industry and also especially in the energy industry.
Okay, so what I'm particularly interested, if you look at the G7 economies, somewhere between 60 and 70% of the employees work for SMEs, small to medium-sized businesses. So most of the governments around Europe, they're after one thing, i.e. better growth. Because you get better growth, get better tax receipts, they can pay off some of the debts that have arisen, especially sort of post-COVID. So normally it would be almost impossible, and certainly your members, I know, Coen, you're not going to do a debt issuance program unless it's 50, 100 million. The institutions won't get out of bed. You're talking about two and a half million?
Yeah, small amounts.
So what does it do? So you've issued this tokenized debt instrument. What sort of things would you invest in then?
Yeah, well, what is interesting, a lot of SMEs, smaller companies, the 70% you're talking about, they're relatively underbanked. They have difficulty in getting a project finance or a loan or whatever.
Banks don't want to lend money to those sorts of businesses.
Banks don't want to lend money. So they often go to friends, fools, family, those type of loans. We believe that there is a huge market in helping these SMEs with a funding strategy. We have an issue in the market now that is just only 2.5 million. That is due to regulatory constraints and just simple testing on how it works. But in future, you could.
But what would they invest in? What can you give the
if
viewers?
They invest?
Yeah. What are you going to buy?
Well,
not you're going to buy, but what are they? You've given them the money. What do they? What are they? They're not going to build a whole solar park.
No, we have portfolios of solar parks and wind parks. We are invested as an equity partner in these projects. We also have mezzanine debt, and we use the funds that we get in to put in mezzanine debts in the project. So the projects will pay interest and will in the end redeem the bonds that are issued. But if we can do it, a lot of other companies can do it as well.
Yeah.
And that is where it really gets interesting. If we would get to an environment where it is relatively easy for serious SME to issue their own private placements, then we will get to a much more efficient European capital market with much more growth opportunity. And imagine what could happen if by better funding, each company could create an extra job. What would happen with joblessness?
Yeah.
It would disappear immediately. So there is a huge interest or relevance for the EU to get this funding
and I think it's something
issue on the table.
It's something that banks are looking at as well. To your point, usually a proper bond issuance is usually 500 million or so, and certainly in the hundreds of millions of euros just to make it viable. And as you said, particularly for mid-corps or for difficult, project finance, often it's not possible necessarily for banks to take on all the principal risk. But is there a role for banks in DLT in terms of building a market-based financing option using DLT with the bank not necessarily taking the principal risk, but providing the credit information, for instance, about companies to the market? So basically, it's a different role, and it's sort of complementary to what banks are doing at the moment. And I think that's definitely what banks are looking at in investment. Yeah.
And I think that the sweet spot over there is anywhere between 10 to 100 million. Actually, that's where the sweet spot is. It's relatively
So almost you can prove the concept, and then we can go to the AFME members and they can say, okay, we know it works, we know there's demand, we can see how it works, and then as you said, they've got good distribution, and they can perhaps then do the 5 to 20 million.
We have member
issues.
banks who are looking at exactly this, and who've looked at how can we do bond issuance for smaller, mid-corps in this case, in a standardized way through DLT, where a bank can actually economically help manage that issuance, or in the case of project finance, in some ways provide residual funding through the market, or provide credit information to the market and let the market do the funding. So there's lots of different roles that could.
And there are quite some challenges, because if you pursue this way, it's actually a private placement under a prospectus or without one if it's for professional investors. But you have to address a lot of issues. What about credit risk? Who is doing recovery if something goes wrong? So there are a lot of issues to address. How do you do KYC for your investors? Is that provided by a bank? Does the company have to do that herself? So that there are a lot of topics on the table, but if you would be able to open that and SMEs are able to bring, for example, a project bond for 50 million for working capital for building a ship.
It's interesting, man, listen to you. My thought process goes to crowdfunding, something which has been very successful in helping SMEs, but it's not been something which the banks do get involved in it, but it's called building a book. And rather than saying, oh, well, I'll put 1,000 or 2,000, they'll put in several millions. We're recording this mid-October, and October the 8th. And a couple of days ago, we saw ICE, the International Exchange. I think it has a turnover, it's various different stock exchanges, at $28 trillion. It's just put $2 billion into Polymarket. And the reason I mentioned Polymarket is that's crowd intelligence. A number of people think that, the next Prime Minister of Peru or Australia or London will be this. They think that someone's going to win the Spanish Open or whatever. The crowd information is actually driving the prediction market. And it's interesting to see a stock exchange is actually got a share in predictions. I'm interested in your thoughts on that.
Well, the issue with that is obviously, these are, in the sense we're talking about public information in some ways, right? These are events that usually are pretty reasonably known, or they're pretty well known, or could be researched. And I think what I'm hearing in the DeFi space, when we're talking about private credit, for instance, which is what we're talking about now, the biggest issue is information, lack of information about the companies you're investing in. So in that sense, and we're both economists, the economics don't change in that sense. There's an information asymmetry, whether you are in traditional crowdfunding platforms or whether you're in a DLT-based space. I need to know who I'm investing in, otherwise I'm not going to invest. And that's where I think a bank or others could play a role, not in providing the actual, as I said, principal, the loan and take the principal risk, but maybe providing credit information to the market.
Almost the infrastructure then.
Yeah, the infrastructure, the information, and then have the market do the funding.
And this is really relevant. Beside our DLT efforts, we developed a risk suite that we use to make a internal credit rating, actually a bank credit rating, an internal rating that we use to define what is a sound pricing of a bond offering that we do. And it provides a lot of risk. So we do a quantitative risk assessment, not a qualitative one. Then you would get into a rating. We do a quantitative one. We publish it, and then you can have some sort of idea of a risk factor in a private placement in a smaller bond. But on the other hand, what we also see, you just mentioned crowdfunding. Crowdfunding is a huge success, but in our opinion, the risk isn't priced correctly. Actually, crowdfunding is a market where investors just want to have 7, 8, 9, or 10%, and the investments
driven by the return as opposed to perhaps what's
they're driven by return, and the return doesn't reflect the risk involved. So there is also there a lack of information and a huge opportunity for parties to provide this information. And it will take a lot of digitization of information and also standardization to give a credit score of a SME.
Which is where AI maybe comes in as well.
Exactly.
But I think it's also important to sort of lift this to the macro level. And we're having a roundtable later this afternoon, and governments are looking. I mean, we're talking about the 10 to 100 million funding gap, which is. I think KPMG did a report on Dutch capital markets about a year ago where they said that is exactly the issue, or one of the 2-3 issues, right? Risk capital being one, lack of private equity availability, but also in terms of in terms of credit, that the 10 to 50, 10 to 100 million funding gap, where the banks are not going to step in with loans, but the markets, the companies are too small to go to market, and therefore they sort of fall in between. I think that's where DLT could provide a sweet spot by extending the market-based option. I think from an economics perspective, I think that's important as well to note, is why bother with DLT when there's crowdfunding, when there's other things. What you're seeing here is obviously the composability aspect of DLT. So you can bring lots of actors and lots of different assets together on a single ledger, which enables, as you said, a broader investor base, but it also enables, a better linkage of different assets as an SME might have once tokenized, could be funded, etc. So I think the DLT sweet spot in some ways, in my view, is not necessarily all the stuff that we often talk about, which is things like democratization, decentralization, disintermediation, immutability of data, although all of those things are important.
All those big words.
All those things, and they could play a role, right? We might see, as you mentioned, we might see disintermediation or changing roles. That's probably going to happen. But I think the big advantage of DLT compared to other options is composability. You can bring everything together. You can bring everyone together. It's not very, in a way, not very sexy. You're just creating it. It's a database technology, but by doing so, you open up possibilities for innovation and also for exchanges and transactions that are not possible currently.
Well, okay, and I think that's a really good point when you talk about the sort of the private equity, private credit type market. And we saw just a couple of months ago, the London Stock Exchange have actually created a new exchange, the DMI, and that's just focusing on tokenized private equity and private credit. Now, those type of investments were exclusively really for your members and for high net worths, i.e. banks, asset managers. But now the man and the lady in the street can actually get involved in that very, very profitable area, because it's been tokenized. But Coen, I'm interested because there's been a lot of activity and a lot of sandboxes and initiatives around tokenization. Apart from the sort of CBD level, there hasn't been, apart from what we've seen recently in America with the Genius Act, we haven't really seen much activity in terms of clear regulatory guidance around tokenized, programmable digital money. I'm interested in thoughts because the banks, the obvious one has to be tokenized deposits, and I know in the UK that they're launching something on that base. But it'd be fascinating to get your thoughts on that. And is there room for CBDCs, stablecoins, and tokenized deposits, or is it just going to go to which one do you think looks the most promising?
That's very difficult to predict the market in the future, I would say. I think indeed we're now starting to see these initiatives. So you mentioned the UK with the announcement, I think, last week. Switzerland, obviously, recently with the Swiss Banking Association also published their pilots, 2 pilots that they've done with deposit tokens or tokenized payment instructions. I think there's still legal issues and still legal challenges to figure out what exactly are we tokenized, what exactly does that token represent. But from an economic perspective, if you're talking about stable coins, I think it's a great short-term solution for sure. It enables a lot of use cases, whether it's bond payments, whether it's cross-border payments, whether it's efficient treasury, and that's why we're obviously seeing banks also moving into this space and others as well. In the US, we might see corporates and crypto natives, etc. So that'll be an interesting dynamic. I think the shortcomings of some ways in stable coins are, first of all, obviously there's no interest payment at the moment in the EU and in the US. Now there might be ways around that and sort of rewards and all of that, but at the end of the day, from a client demand perspective, it's essentially narrow banking. It's essentially cash, which is fine if you're moving in and out of transactions. But ultimately, is that it's not an asset you might want to hold for too long. Whereas a bank deposit, at least traditionally, it pays some interest. Maybe it's not a lot, but it's some. So from a demand perspective,
it used to be negative interest here.
It used to be negative, yeah. Not at least zero. And I think the second issue, which is more of a macro issue from a policymaker perspective, if you talk about stablecoins, and let's say they really take off, let's say in the US, it would represent potentially a massive deleveraging of your financial system and of your economy, because you're essentially draining deposits from banks, which means ultimately you're draining the money out of risky assets, loans, mortgage loans, corporate loans, whatever it is, and you're moving that into safe government assets, treasuries or whatever it may be, which means a sort of a transfer from the private to the public sector, which I don't think is necessarily what DLT and blockchain in its purest sense was about, but also potentially, and I think Andrew Bailey said that recently in an interview, so he said, look, who is going to fund the real economy? If stablecoins take off, who's going to provide that credit to the economy? So I think from that perspective, bank deposits don't have those two drawbacks. Now, they have other issues, and I think the reason it hasn't really materialized is, first of all, there needs to be central bank money in order to settle those transactions. And obviously there needs to be standardization. There need to be rules and standards around what is it that we're exchanging in what way, etc., which is what we're now beginning to see. So who knows? I think maybe stablecoins are definitely the more available, perhaps the more practicable solution in the short term. But I think we're starting to see bank deposits coming into the space as well. People are looking at it, and who knows, in a number of years' time, when central bank money is on chain, bank deposits might be a feasible option, and then the market can decide.
So, Coen, it's interesting because there are very much two schools of thought. The EU funded the Copenhagen Economic Institute a report who came back with exactly what you were saying, the concern, and they're saying that you could see up to a 35 basis point reduction in GDP in Europe if money went from bank deposits into sort of stable coins, because basically banks would have to compete to get the money back, i.e. interest rates would have to go up. But then you had the Bank of International Settlements saying, well, for every 10% adoption of digital money, it's a 1% increase in GDP. Now, fractional banking isn't that old in the scheme of things, and we have survived before that. Shara banking doesn't need sort of fractional banking. So I think there has to be room for both.
There must be, and I think again the digital money point around is obviously linked to broader tokenization, broader efficiencies in the economy, which stablecoins can bring, but potentially tokenized deposits can bring as well. And I think there is a question. I mean, in the US, obviously, stablecoins seem to be sort of all the rage, and sort of all the momentum is behind stablecoins at the moment.
Well, that's King Trump, isn't it?
Yes,
he's got to refinance that 17 trillion somehow. Well, and he wants stablecoins to try and put interest rates down.
It's certainly helpful for the Treasury Secretary, I would say. But the thing is, in the US, of course, capital markets are very deep, very liquid, very large, and to that extent, there's much more of a tradition of capital market funding to the real economy. Whereas in Europe, bank-based funding is the core. So that in a way, I think that means banks have a stronger position to issue, whether it be stablecoins or whether it be tokenized deposits. But at the same time, if there were to be a drain away from bank deposits, that might have a bigger impact on the real economy as well. So I think it's just, to your question, I think all of these different options will come to the fore and will make it to market in the next couple of years, and then we will see how that develops. Because obviously, as you know, there's also discussions around should stablecoins be permitted to pay a yield. That is a discussion in the US and in the EU. So will there be change in the regulation on that front? Who knows?
That would be of high interest in the bonds that we offer. If we would be able to distribute yield via stablecoin instead of fiat via IBAN, it would bring a lot of.
That's my exact point. We've got examples of funds being tokenized, property being tokenized, bonds being tokenized, equities. How does the coupons, the dividends, the interests, the rent, how does that get paid? And what we're beginning to see is that once you've tokenized something, instead of paying every 6 months, then potentially the income distributions and build the BlackRock money market fund is a good example. It used to have 2 distributions a year. Now it's actually going to have once a month. They're talking potentially, some of these money market funds, of doing it weekly. So that'll help cash flow.
Programmable way.
Totally programmable way. So you can't do that by writing checks.
No, that's true. If you look to energy projects where we settle every month, you could distribute.
But you could stream that.
We could stream that
daily,
online,
potentially.
It goes to the point around what is the economic rationale here? Is it stablecoin versus bank deposit? In other words, is it cash versus a claim on a bank? Or is the really major gain the ability to, transfer funds much more quickly, in a much more programmable way, in a much more customizable way, in a cheaper way with lower fees? It's the latter. It's not necessarily the form in which it takes. Well, the form can have major repercussions, and I think that's. I don't think there's enough discussion about that yet. I think there's a great focus on stable coins, and what the benefits versus and the risks are. I think are not necessarily discussed very extensively, or haven't been.
Well, look, I'm mindful of time. Thank you both for joining today. Looking forward to this afternoon. If you had to, I'm now going to put both of you on the spot. If you hoped one thing that's going to come out today, Meindert, what do you hope that we're going to see from the AFME 2 Tokens DNB event that being held in Amsterdam today?
Actually, an open discussion, an open-minded discussion, and to look with each other, to embrace the possibilities, and to really approach it with an open attitude and not start to think in problems, but to discover the potential, and then in the future have the discussion, okay, if this potential is there, what do we need to do on a regulatory field? What is the That would be great to.
Okay, so an open-minded
discussion, because as an issuer, we of course have to deal with the regulator.
So it'd be quite nice to go from 2.5 million maybe to 5 or maybe to 7.
Yeah,
maybe.
Yeah, maybe.
Coen, what would you like to see? You can't say open-minded. You've got to come at something different.
Well, I would say I'm maybe a little bit more ambitious in the sense that, I mean, we look at it from a European perspective and maybe even from a global perspective, and our members certainly do. And when I look at around Europe, I see a lot happening in Germany, a lot happening in Luxembourg, very proactive, both on the regulatory front, but also from an industry perspective. And these two things, of course, they reinforce each other. In the UK, I think we're starting to see that as well, with some really great ideas coming out of industry. I think some interesting commitments from the government, although there's a lot of work still to be done. And I look at the Netherlands and I say, look, in a way, all the use cases where DLT is taking off and is very useful, whether it's finance, capital markets, whether it's sustainability, whether it's trade and logistics, energy, etc. These are all areas where the Netherlands actually has a very, very strong position and is very well placed to adopt. At the same time, some of the biggest societal problems we're facing in the Netherlands, whether it's housing shortage, whether it's sustainability, nitrogen crisis, etc. Again, something that DLT can help provide a solution for. So, in a way, the Netherlands should be doing more than any other European country. And so, what I would hope to come out of today's discussion is, yes, a good discussion, but also a commitment to say, look, we'll have a new government at some point in the new year. It'd be great if we had a strategy ready for that government to adopt in terms of, okay, these are the things that we need to be doing. And I hope today is sort of the kickoff to developing that strategy.
So could I paraphrase it? You'd like the Dutch to take their clogs off and put their sneakers on and move a bit faster?
Well, they can keep their clogs on as long as they move a little faster.
Okay, Coen, Meindert, thank you for joining us today, and thank you for listening to the show. And if you'd like more information, then just go to 2 Tokens. You can find them, and or just contact Mr. Bausch. He can tell you all you need to know about tokenization. Thank you.
That was it for today's podcast. Thank you for listening in, and please subscribe so you don't miss out on our upcoming episodes. If you want to get in touch with us, you can find our contact details at www.2tokens.org.